Hello friends, कैसे हैं आप सब? Especially all you BBA and Bcom students. How's the exam prep going? Well, let's make it a little easier with a super quick revision of a really important chapter, income from salaries. Chalo, let's get you exam ready in just about 5 minutes.
Have you ever really looked at your salary slip? You see all these different things on there. Basic, HRA, PF, TDS. It's kind of confusing, right? So what's the final amount that the income tax department actually taxes you on? Let's clear up that confusion right now. Okay, here's our game plan. First, we'll decode your salary slip. Then, we'll get into the most important rule of this chapter, the master and servant rule. After that, we'll explore allowances, find out about some government discounts, put it all together in the final calculation, and wrap up with the key takeaways for your exam. Ready? Let's do this. So, first things first, the money that actually hits your bank account, that's your net salary. But, and this is important, the income tax department isn't really concerned with that. They're interested in your gross salary. That's the full amount you earn before anything gets cut. Right, so the main thing to remember is that all tax calculations begin with your gross salary. For instance, let's say your gross salary is 50,000 rupees, but after they deduct things like PF, profession tax, and maybe a loan payment, you only get 33,800 in hand. The tax department? They're looking at the full 50,000. Simple. And yeah, another key rule. Salary is taxed on a due or receipt basis, whichever is earlier. That means even if your salary is due but you haven't received it yet, it's still taxable. Now, before we even start calculating the tax, we have to ask a very important question. Is the money you're getting actually considered salary under the law? And for that, there's one golden rule. And here it is. This is probably the most fundamental concept in this entire chapter. If there isn't an employer-employee or master-servant relationship between the person paying and the person receiving the money, then that income simply cannot be taxed under the salary's head. This is always the first thing you check.
So what's the difference? Well, think of it this way. In a contract of service, your boss has the right to tell you what to do and also how to do it. That's a classic job, and the income is salary. But in a contract for service, a client tells you what they want done, but how you do it is completely up to you. Think of a freelancer. That income isn't salary, it's taxed under profits and gains from business or profession, or maybe other sources.
Let's make this crystal clear with some quick examples. A college lecturer's pay? Well, there's a clear master-servant relationship, so it's income from salaries. But what about the fees they get from a university for checking exam papers? In that case, the university isn't their master, so that's income from other sources. See the difference? Similarly, money a partner gets from their own firm is considered profits and gains from business or profession, or PGBP, definitely not salary.
All right, moving on to allowances. What are these? Well, you can think of them as the extras in your salary. They are fixed amounts of money that your employer gives you to cover specific expenses, like your house rent or maybe your travel costs.
Now, these allowances fall into 3 basic categories. Some are fully taxable. A common example is dearness allowance. Others are partly exempt from tax, like the famous house rent allowance or HRA. And a few are fully exempt, like the allowances given to government employees who are serving outside India.
Okay, friends, listen up. For your exam, nothing is more important than HRA. I can almost guarantee you'll get a practical question on it, so you'll want to pay very close attention to what's coming next.
So how much of your HRA is tax-free? To figure this out, we calculate 3 different amounts, and whichever of the 3 is the lowest, that's the amount that is exempt from tax. It's that simple. So what are the 3 amounts? First, the actual rent you paid minus 10% of your salary. Second, 50% of your salary if you live in a metro city, or 40% for anywhere else. And third, the actual amount of HRA you received from your employer. Just find the lowest of these 3 figures, and that's your HRA exemption.
And one more thing. This is a classic exam trap, so be careful. For the HRA calculation, the word salary has a very specific meaning. Here, salary means your basic salary, plus only that part of dearness allowance that counts for retirement benefits, plus any commission you get as a fixed percentage of turnover. You have to remember this special definition. It's where a lot of students make mistakes. Okay, so we've added up all our income components. Now, for the good part. It's time to claim some discounts from the government. These are the deductions under Section 16, and they get subtracted directly from your gross salary.
There are three main deductions to know. First, the standard deduction of 50,000 rupees. This one's for pretty much everyone. Second is the entertainment allowance. But remember, the deduction for this is only for government employees. And third, profession tax. The key here is that you can only deduct it on a payment basis, meaning you claim it in the year you actually pay it.
All right, time to put all the pieces of the puzzle together and see how we calculate the final taxable salary. This is the exact format you should be using in your exams. So, as you can see in this table, the whole process is laid out. You start with your basic salary. You add all your taxable allowances to that, which gives you your gross salary. Then, from that gross salary, you subtract those deductions under Section 16. And voila! The final number you're left with is your taxable income from salaries.
Okay, we've gone through a lot, so let's do a final, super quick recap. Here are the 4 golden rules from this chapter that you absolutely must remember. Number 1, the master-servant relationship is always the first and most important test. Number 2, salary is taxed on a due or receipt basis, whichever happens first. Number 3, your HRA exemption is always the least of the 3 amounts we calculated. And finally, number 4, don't forget to subtract those Section 160 deductions right at the end. And there you have it. Income from salaries should be pretty much sorted for you now. But that brings up a new question. What if you own a property and you earn rent from it? How does that get taxed? Well, that's a whole different ballgame, and definitely a story for another day. For now, all the very best for your exams.